So Alphabet stock price today is $173. I expect it to hit 300 in 1 year. That is 70% upside, and $500 in 3 years. So this is a 3x return. Why? Because Alphabet price to earning ratio today is just 18, while the S&P 500 average is 28. So Google is undervalued because investors were worried that the AI might disrupt the Google search, which represents 55% of the revenues. But just last week, Google redesigned the user experience, added the new AI mode button directly into the search bar on google.com. And they announced a series of major AI updates that are going all in the right direction. So they are shifting the user behavior, creating new habits, cannibalizing their own search before ChatGPT or someone else does it, which is exactly the right move. If Alphabet were simply priced at the current market average price to earning ratio of 28, which I think is already justifiable, the stock should be trading at $230 to $240. Because honestly, today it doesn't make sense. Alphabet is trading at a lower PE ratio than Visa and Coca-Cola and lower than McDonald's. Anyway, let's talk about the future. There are two scenarios. In the best case scenario, Alphabet continue the momentum we already saw in Q1, where they had 12% year-over-year growth and accelerated to 14 to 15% year-over-year growth. This will happen if they fully integrate AI across all of their products. It will unlock new customer experiences and new revenue streams. And I think Google is uniquely positioned to win in this AI race. They have the infrastructure, Google Cloud, they have their own chips, they have the operating system, Android, they have their own phone, Pixel, they have the browser, Chrome. When they integrate Gemini into everything, search, YouTube, Maps, Gmail, Android, everywhere, this will be super helpful. They're also investing in a lot of other bets like quantum computing, and even if one of those bets succeeds, the return would be 1000x. And even without this revenue acceleration, if they just apply AI internally to reduce costs, I think they could double their earnings within the next 3 years. Now, the worst case. The worst case is Google misses the AI opportunity, so the growth slows, let's say go to from 12% last quarter to 6%, so the stock will drop 20, 30%. So I see this as asymmetric bet. Downside is minus 20 to minus 30%, but the upside is plus 70% in 1 year, plus 200% in 3 years. And this jump won't happen immediately. It will happen in steps. Every time Alphabet takes a correct step integrating AI into its products, the stock will move 10 to 20% closer to this upside. And every mistake and every misstep, it will take it 10 to 20% in the other direction. This is how I am evaluating them and how I'm trading Alphabet. And a disclaimer, I own the stock, so this is not a financial advice. Do your own research and don't follow me blindly.